Question 1. Which of the following is TRUE? About the Citizens Property Insurance Corporation (CPIC) in Florida. A CPIC is a private insurance company that competes in the open market with other insurers. B. CPIC was created to provide insurance for high-risk properties that cannot find coverage in the private market. C. CPIC provides insurance to all homeowners in Florida regardless of the risk level. D. CPIC only offers coverage for flood insurance in coastal areas. Answer B. Explanation. The Citizens Property Insurance Corporation (CPIC) was established as Florida's insurer of last resort primarily to provide insurance coverage for high-risk properties that cannot find affordable insurance in the private market. This is particularly important for homes in areas prone to hurricanes and windstorms. CPIC is a government entity, not a private competitor. It also does not provide coverage for all homeowners or focus exclusively on flood insurance. While CPIC does not primarily offer flood insurance, it focuses on homeowners' policies. Windstorm and other coverage is excluded by private insurers due to high risk. Florida Statutes Chapter 627 governs CPIC's operations, emphasizing its role in protecting Florida's high-risk properties. Question 2. Scenario-based. Mr. Santiago has a home located in a coastal area of Florida that is at a high risk of windstorm damage. His home was built over 40 years ago, and after being declined coverage by private insurers due to the home's age and location, Mr. Santiago considers applying for a policy with Citizens Property Insurance Corporation (CPIC). Before submitting his application, he learns about certain requirements regarding mitigation features such as storm shutters and roof reinforcements. What should Mr. Santiago do to ensure he qualifies for the best possible premium? A. Do nothing, as CPIC is required to provide coverage regardless of mitigation efforts. B. Install storm shutters and reinforce his roof to qualify for mitigation discounts offered by CPIC. C. Apply to CPIC immediately without making any home improvements to avoid delays. D. Wait until the private market changes and reapply to private insurers instead of CPIC. Answer B. Explanation. Under Florida law, especially after the devastating hurricanes, mitigation features such as storm shutters and roof reinforcements can significantly reduce the risk of damage to a property and thus lower insurance premiums. Citizens Property Insurance Corporation offers discounts and incentives for homeowners who take steps to mitigate windstorm risks. By installing storm shutters and reinforcing the roof, Mr. Santiago would not only qualify for coverage but also benefit from reduced premiums. Doing nothing, option A, would likely result in higher premiums, and waiting, option D, is not advisable since CPIC was created for situations exactly like Mr. Santiago's. Therefore, taking proactive mitigation steps is the best course of action. Florida Statutes Chapter 627 supports mitigation credits for homeowners. Question 3. What is the key difference between replacement cost and actual cash value in dwelling coverage under Florida home insurance policies? A. Replacement cost pays for the cost to replace the damaged property without considering depreciation, while actual cash value includes depreciation. B. Actual cash value provides more coverage by paying the full replacement cost of the property. C. Replacement cost only applies to personal property, while actual cash value applies to the dwelling. D. Both replacement cost and actual cash value are calculated the same way, but replacement cost is capped at a lower amount. Answer A. Explanation. The replacement cost in dwelling coverage refers to the amount it would take to replace or repair the damaged property at current prices without factoring in depreciation. In contrast, actual cash value takes into account depreciation, meaning it pays out the current market value of the property, which could be less due to wear and tear over time. This is a critical distinction for homeowners, as choosing actual cash value may result in a low payout after loss. Option B is incorrect because actual cash value provides less coverage due to depreciation, and option C misrepresents the application of these terms. Option D is incorrect as they are calculated differently, with replacement cost generally providing more extensive coverage. Florida Statutes Chapter 627 specifies the rules governing replacement cost and actual cash value policies. Question 4. Which of the following would NOT be covered under a standard Florida home insurance policy? HO3 as a named peril, A. Vandalism, B. Earthquake, C. Fire, D. Windstorm. Answer B. Explanation. A standard HO3 home insurance policy typically covers a range of named perils, including fire, windstorm, and vandalism. However, earthquakes are generally excluded from standard coverage and require separate endorsement or policy. This is because earthquakes are considered catastrophic events that are excluded from most homeowner policies unless additional coverage is purchased. Florida, being more susceptible to hurricanes, typically excludes perils such as earthquakes but includes windstorms and hurricanes. Florida's statutes Chapter 627.712 outlines the need for additional policies for excluded perils like floods and earthquakes. Question 5. Under Florida's hurricane insurance laws, what triggers the hurricane deductible in a homeowner's insurance policy? A. Any storm with winds exceeding 74 miles per hour. B. A storm that is officially declared a hurricane by the National Weather Service and makes landfall in Florida. C. Wind damage caused by any storm that occurs in Florida during hurricane season. D. Any windstorm-related damage, regardless of the storm's classification. Answer. B. Explanation. In Florida, a hurricane deductible is triggered when a storm is declared a hurricane by the National Weather Service and makes landfall in the state. The deductible is applied to losses caused by windstorm damage during a hurricane from the time a hurricane watch or warning is issued until 72 hours after it ends. This deductible is separate from the regular policy deductible and typically higher. Options C and D are incorrect as they do not take into account the formal declaration and timing requirements outlined in Florida Statutes Section 627.4025. Question 6. Scenario-based. MS Avery has a homeowner's insurance policy that provides actual cash value SEV coverage. A home is damaged by a fire and the estimated cost to replace the damaged portion is $50,000. However, due to depreciation, the value of the damaged part of her home is assessed at $35,000. What amount is MS Avery likely to receive from her insurance claim? A. $50,000, the full replacement cost. B. $35,000, the depreciated value. C. $42,500, half of the difference between replacement cost and depreciated value. D. $0, because she does not have replacement cost coverage. Answer. B. Explanation. Since MS Avery's policy covers actual cash value SEV, she will receive the depreciated value of the damaged portion of her home, which is assessed at $35,000. The key difference between ACV and replacement cost is that ACV factors in depreciation, meaning the payout is reduced by the amount of wear and tear or aging. If she had replacement cost coverage, she would receive the full $50,000. Option C suggests a payout method not used in ACV policies, and option D is incorrect since she still qualifies for a payout just at the depreciated value. Florida Statute Section 627.7011 details these distinctions. Question 7. Which of the following best describes the purpose of the Florida Hurricane Catastrophe Fund FHCF? A. To provide direct insurance coverage to homeowners for hurricane damage. B. To reimburse private insurers for a portion of catastrophic hurricane losses. C. To offer low-cost flood insurance to homeowners in high-risk areas. D. To serve as Florida's main provider of windstorm coverage for coastal properties. Answer. B. Explanation. The Florida Hurricane Catastrophe Fund FHCF is a state-run reinsurance program that reimburses private insurance companies for a portion of their catastrophic hurricane losses. It does not provide direct insurance coverage to homeowners, but plays a critical role in stabilizing the insurance market by offering financial support to insurers after major hurricanes. Option A is incorrect because FHCF is not a primary insurer. Option C refers to flood insurance, which is unrelated to the FHCF, and option D confuses FHCF with the Citizens Property Insurance Corporation, which offers windstorm coverage. The FHCF's purpose and operations are outlined in Florida Statutes Chapter 215.555. Question 8. When determining premiums for a Florida home insurance policy, which of the following factors is likely to have the most significant impact on the cost of coverage? A. The homeowner's credit score. B. The proximity of the home to the coast. C. Whether the home has fire-resistant materials. D. The homeowner's claims history over the past 10 years. Answer. B. Explanation. In Florida, proximity to the coast is one of the most critical factors affecting the cost of home insurance due to the high risk of hurricanes and windstorms. Homes located closer to the coast are more vulnerable to storm surge, wind damage, and flooding, which significantly increases the risk to insurers. While a homeowner's credit score, fire assistant materials, and claims history are important and can lead to discounts or rate adjustments, the geographic risk associated with coastal areas has the largest impact on premiums. Florida's Office of Insurance Regulation (WA) allows insurers to adjust rates based on location risk factors as outlined in Florida Statutes Chapter 627.62. Question 9. Which of the following statements about flood insurance in Florida is correct? A. Flood insurance is automatically included in all standard homeowner policies. B. Homeowners in high-risk flood zones are required by law to have flood insurance if they have a federally backed mortgage. C. Flood insurance can only be purchased through the National Flood Insurance Program (NFIP). D. Private flood insurance is prohibited in Florida. Answer B. Explanation. In Florida, homeowners living in high-risk flood zones, as determined by FEMA, are required to have flood insurance if they have a federally backed mortgage. Flood insurance is not included in standard homeowners policies, option A, and must be purchased separately, while the National Flood Insurance Program (NFIP) is a common provider. Private flood insurance is also available and is permitted in Florida. Option D is incorrect. Private insurers have begun offering competitive options in response to gaps in NFIP coverage. For mandatory flood insurance requirements, see Florida Statutes Chapter 627.715. Question 10. Which of the following would likely reduce a Florida homeowner's insurance premium? A. A history of previous claims related to storm damage. B. Installing impact-resistant windows and storm shutters. C. Having an older home without any recent upgrades. D. Being located in a flood zone without purchasing flood insurance. Answer B. Explanation. Installing impact-resistant windows and storm shutters is an effective mitigation measure that can lower insurance premiums in Florida. Such upgrades reduce the risk of damage during hurricanes and windstorms, which are common in the state. Florida offers wind mitigation discounts for homeowners who take these preventive steps. A history of storm damage claims, option A, and having an older home, option C, without updates would likely increase premiums. Not purchasing flood insurance, option D, does not impact standard home insurance premiums, but it would leave the homeowner exposed to significant financial risk. Florida Statutes Chapter 627.629 addresses wind mitigation and premium discounts. Question 11. In Florida, how long does an insurer have to acknowledge a property insurance claim once it is reported by a policyholder? A. 3 days. B. 7 days. C. 14 days. D. 30 days. Answer C. Explanation. Under Florida Statutes Section 627.70,131, insurers must acknowledge receipt of a property insurance claim within 14 calendar days. This is the first step in the claims process, and failure to meet this requirement could result in penalties or regulatory actions against the insurer. The insurer's acknowledgement can be either written or verbal, but it must be documented. This timeline ensures that policyholders are given a timely response and that the claims process begins promptly. Question 12. Which of the following is true about Florida's assignment of benefits? A. Law for property insurance claims. A. It allows policyholders to assign their entire insurance policy to a third party. B. It requires insurers to pay claims directly to contractors without policyholder involvement. C. It places restrictions on AOB agreements to prevent fraud and abuse. D. It makes the insurer responsible for negotiating repair costs directly with contractors. Answer C. Explanation. Florida's assignment of benefits (AOB) law is revised to place restrictions on AOB agreements aiming to reduce fraud and abuse in the claims process. Policyholders can assign part of their benefits to a contractor or service provider, but the new laws limit the scope of these agreements to protect consumers from inflated repair costs and lawsuits. The law ensures that policyholders still retain control over their claims and limits the ability of contractors to sue insurers. Options A, B, and D misrepresent the current framework under Florida Statutes Chapter 627.7152. Question 13. Scenario-based. Mr. Perez owns a home in a coastal area of Florida and recently experienced wind damage to his roof during a hurricane. His homeowner's insurance policy has a hurricane deductible of $10,000 and a standard deductible of $1,000. The total cost to repair the roof is $15,000. How much will Mr. Perez need to pay out of pocket for the repairs? A. $1,000. B. $10,000. C. $5,000. D. $15,000. Answer B. Explanation. Since the damage occurred during a hurricane, the hurricane deductible applies, which in this case is $10,000. Mr. Perez would be responsible for paying this amount out of pocket, and his insurance policy would cover the remaining $5,000. The standard deductible of $1,000 does not apply here, as it only applies to non-hurricane claims. Florida policies often have a separate higher deductible for hurricane damage, as outlined in Florida's statute section 627.4025. Question 14. Under Florida law, what must be included in a homeowner's insurance policy's declarations page? A. The full text of the insurance policy. B. The insurer's financial ratings and licensing information. C. A detailed description of the home's construction materials. D. The amount of coverage, deductibles, and limits for each type of peril. Answer D. Explanation. The declarations page of a homeowner's insurance policy must clearly outline the amount of coverage, deductibles, and limits for each type of peril, along with the premium amounts. This page serves as a summary of the policy's key terms and provides an overview of the financial responsibilities of both the insurer and the insured. The declarations page does not include the full text of the policy, option A, insurer ratings, option B, or detailed construction information, option C, though those may be found elsewhere in the policy. The requirements are outlined in Florida Statute Section 627.4131. Question 15. What is the primary function of the Citizens Property Insurance Corporation in Florida? A. To provide coverage for homes valued over $1 million. B. To serve as the state's primary windstorm insurer for all Florida homeowners. C. To offer insurance to homeowners who cannot obtain coverage from private insurers. D. To subsidize the cost of flood insurance in high-risk areas. Answer C. Explanation. The Citizens Property Insurance Corporation was created by the Florida legislature to provide insurance coverage to homeowners who are unable to obtain coverage from private insurers, particularly in high-risk areas for windstorm or hurricane damage. Citizens acts as the insurer of last resort and provides policies to those who have been denied coverage or who face unaffordable rates in the private market. Option A is incorrect, as Citizens does not cover luxury homes over $1 million. Option B overstates its role, and option D refers to flood insurance, which is unrelated to Citizens. The function of Citizens is explained in Florida Statutes Chapter 627.351. Question 16. Which of the following conditions must a Florida homeowner meet to qualify for a wind mitigation discount on their insurance premium? A. Own a home more than 10 miles from the coast. B. Install hurricane shutters or impact-resistant windows. C. Have a home built before 1975. D. Obtain flood insurance through the National Flood Insurance Program. Answer B. Explanation. Florida homeowners can qualify for a wind mitigation discount by installing hurricane shutters or impact-resistant windows, which reduce the risk of windstorm damage. Florida law encourages these upgrades by offering significant discounts on premiums, as windstorm damage is a primary concern in the state. Options A and C do not qualify for wind mitigation discounts, and option D pertains to flood insurance, which is separate from wind mitigation. These discounts are outlined in Florida Statute Section 627.629. Question 17. Which of the following best describes a sinkhole loss under Florida law? A. Any ground collapse, regardless of the cause. B. Structural damage to a building caused by sinkhole activity. C. Water damage resulting from underground flooding. D. Erosion caused by wind and rain, leading to property damage. Answer B. Explanation. A sinkhole loss is defined in Florida law as structural damage to a building caused by sinkhole activity, which includes the collapse of underground limestone, leading to depression in the ground surface. Not all ground collapses qualify as sinkhole losses, as they must be related to specific geological conditions. Option A is too broad, and options C and D describe different types of damage unrelated to sinkholes. Florida Statute Section 627.706 details sinkhole definitions and coverage. Question 18. In Florida, what is the standard time limit for filing a lawsuit against an insurance company over a property claim dispute? A. 1 year. B. 2 years. C. 3 years. D. 5 years. Answer D. Explanation. The statute of limitations for filing a lawsuit against an insurance company over a property claim dispute in Florida is 5 years. Is time limit applies from the date of the incident or denial of the claim, allowing policyholders ample time to seek legal recourse if they believe their claim was wrongfully denied or mishandled. Options A, B, and C are incorrect, as the statute of limitations for property claims in Florida is explicitly set at 5 years under Florida statutes, section 95.11. Question 19. What must a Florida homeowner do to qualify for the home hardening tax exemption? A. Install a new roof. B. Build a storm shelter on the property. C. Make windstorm protection improvements to the home. D. Purchase both windstorm and flood insurance. Answer C. Explanation. The home hardening tax exemption in Florida provides tax relief to homeowners who make windstorm protection improvements to their homes, such as installing hurricane-resistant doors, windows, or roofs. These upgrades help mitigate damage during storms, and the exemption encourages homeowners to take proactive measures. Installing a new roof, option A, may qualify only if it meets wind resistance standards, while options B and D are unrelated to the exemption. The guidelines for this exemption are outlined in Florida's statutes, Chapter 196.175. Question 20. What is the maximum coverage limit for personal property under a standard Florida HO3 homeowners insurance policy? A. 10% of the dwelling coverage. B. 25% of the dwelling coverage. C. 50% of the dwelling coverage. D. 75% of the dwelling coverage. Answer C. Explanation. Under a standard HO3 homeowners insurance policy, personal property is typically covered for 50% of the dwelling coverage limit. This means if the dwelling is insured for $200,000, the personal property would be covered up to $100,000. Option C is the industry standard, while options A, B, and D misrepresent the typical coverage structure. However, policyholders can adjust this limit based on their specific needs as outlined in their policy's terms. Florida Statutes Section 627.701 explains the framework for personal property coverage in homeowners policies. Question 21. Under Florida law, which of the following perils is typically not covered by a standard homeowners insurance policy? A. Fire. B. Theft. C. Windstorm. D. Flood. Answer D. Explanation. A standard homeowners insurance policy, such as the HO3 policy in Florida, typically does not cover flood damage. Flood insurance must be purchased separately, often through the National Flood Insurance Program and FIP or private insurers. Other perils like fire, theft, and windstorm damage are usually covered by the standard policy. Florida law encourages homeowners in flood-prone areas to obtain flood insurance, but it is not automatically included in standard homeowner policies. Question 22. Which of the following is true regarding replacement cost coverage in Florida homeowners insurance policies? A. It reimburses homeowners for the actual cash value of damaged property. B. It covers the cost of rebuilding the home without accounting for depreciation. C. It provides reimbursement based on the original purchase price of the home. D. It covers only the depreciated value of personal belongings. Answer B. Explanation. Replacement cost coverage reimburses homeowners for the cost of rebuilding or repairing the home without accounting for depreciation, meaning the homeowner can replace the damaged property with new materials. This is different from actual cash value (ACV) coverage, which deducts for depreciation. Options A, C, and D refer to coverage types that involve depreciation or original cost, which are not part of replacement cost coverage. Question 23, scenario-based. Mrs. Thompson filed a claim after a lightning strike damaged the electrical system in her home. The repairs totaled $12,000, but her insurance company offered $8,000, stating that the damage exceeded her coverage limits. Upon reviewing her policy, Mrs. Thompson realized she had a $10,000 limit for lightning damage. What should Mrs. Thompson do next to resolve this dispute? A. Accept the $8,000 offer. B. Hire an independent adjuster to evaluate the damage. C. File a complaint with the Florida Department of Financial Services. D. Appeal the decision directly with her insurer, referencing the policy limit. Answer D. Explanation. In this scenario, Mrs. Thompson should appeal the decision with her insurer, referencing the $10,000 policy limit for lightning damage. The insurer's offer of $8,000 may indicate an error or misunderstanding regarding her coverage. By appealing, she can seek a resolution based on the terms of her policy while hiring an independent adjuster, option B, or filing a complaint, option C, may be options later on. The first step is to address the issue directly with the insurer. Question 24. In Florida, How long does an insurance company have to make a decision on a property insurance claim once all necessary documentation has been submitted? A. 10 days, B. 30 days, C. 60 days, D. 90 days. Answer D. Explanation. According to Florida Statute Section 627.70,131, an insurance company has 90 days from the date the policyholder submits all necessary documentation to make a decision on a property insurance claim. The insurer must either pay or deny the claim within this period unless circumstances beyond their control prevent a timely decision. Failure to meet this deadline can result in penalties and interest payments to the policyholder. Question 25. What is the minimum liability coverage required for homeowners insurance policies in Florida? A. $10,000, B. $50,000, C. $100,000, D. There is no minimum requirement. Answer D. Explanation. Florida does not have a state-mandated minimum liability coverage requirement for homeowners insurance policies. However, insurers often recommend liability coverage of at least $100,000 to protect against potential claims involving injury or property damage to others. While some lenders may impose their own requirements for liability coverage, the state itself does not set a minimum. Question 26. Which of the following is a common reason for homeowners in Florida to be denied coverage by private insurers, resulting in their need to obtain insurance through Citizens Property Insurance Corporation? A. Living in a flood zone, B. Owning a home built after 2005, C. Living in an area with frequent sinkhole activity, D. Having a swimming pool on the property. Answer C. Explanation. Homeowners in Florida may be denied coverage by private insurers if they live in an area with frequent sinkhole activity, as this presents a higher risk to the insurer. Citizens Property Insurance Corporation often provides coverage to homeowners who cannot obtain it from the private market due to such risks. Living in a flood zone, option A, typically requires separate flood insurance, while the age of the home, option B, and having a swimming pool, option D, are less likely to result in denial of coverage. Question 27. Which organization in Florida regulates insurance companies and ensures compliance with state laws? A. Florida Department of Financial Services, DFS, B. Florida Office of Insurance Regulation, WA, C. National Association of Insurance Commissioners, NAIC, D. Federal Insurance Office, FIO. Answer B. Explanation. The Florida Office of Insurance Regulation, WA, regulates insurance companies operating within the state, ensuring compliance with Florida laws and protecting consumers. The OIR monitors insurer solvency rates and policy terms. The Florida Department of Financial Services, DFS, option A, oversees various financial services but does not directly regulate insurers. The NAIC, option C, is a national organization, and the FIO, option D, is a federal entity, neither of which has direct regulatory authority in Florida. Question 28. In Florida, what is the purpose of the Windstorm Underwriting Association? A. To underwrite flood insurance for homes in high-risk areas. B. To provide coverage for windstorm damage in areas where private insurers will not offer it. C. To assess the damage after a major hurricane and determine statewide insurance rates. D. To represent the interests of insurers in legal disputes with policyholders. Answer B. Explanation. The Florida Windstorm Underwriting Association, FWIA, was established to provide windstorm coverage to homeowners in areas where private insurers are unwilling to offer it, particularly in high-risk coastal regions. This ensures that homeowners in these areas can still obtain insurance against wind damage. Options A, C, and D describe unrelated roles that are not part of the FWIA's responsibilities. Question 29. Which of the following actions must Florida insurers take during the hurricane season? A. Automatically increase coverage limits for all policies. B. Provide discounts on policies for policyholders who have hurricane shutters. C. Implement a moratorium on policy cancellations. D. Increase premiums by a fixed percentage to cover potential hurricane losses. Answer C. Explanation. During hurricane season, Florida insurers are required to implement a moratorium on policy cancellations, meaning they cannot cancel a policy solely due to a pending hurricane. This protects homeowners from losing coverage right before or during a storm. Discounts for hurricane shutters, option B, may apply but are not required during the season. Options A and D do not reflect standard regulatory requirements. Question 30. What coverage is provided by Florida's law regarding ordinance or law insurance in homeowner policies? A. It covers the cost of rebuilding a home after it is destroyed by fire. B. It covers additional costs incurred to bring a home up to current building codes after a loss. C. It covers the full replacement cost of any structure older than 10 years. D. It covers any legal expenses related to property disputes with neighbors. Answer. B. Explanation. Ordinance or law coverage pays for the additional costs of bringing a home up to current building codes after a covered loss. For example, if the home is damaged in a hurricane and current building codes require stronger materials or construction techniques, ordinance or law coverage will help pay for these upgrades. This type of coverage is important in Florida, where building codes are frequently updated due to hurricane risks. Options A, C, and D describe other types of coverage that are unrelated to ordinance or law insurance.